So I'm kind of active on Twitter, but I don't just post to post, which I think a lot of people do. Well, I got to post 4 or 5 times on Twitter and make sure my followers are getting something all the time. When I post, I like to post something that's really interesting, something I'm seeing a data point that's not being mentioned in the market. Someone on CNBC says something that I don't agree with. I just not call them out, but just say why I think they're wrong. Or I get so much access to sell side research. And a lot of it's good. It's just a macro picture. It's, I know the whole model and discounted cash flows and stuff like that gets, a little crazy. And, sometimes just to formulate a target price on a stock to make sure on an institutional level you're able to buy it and you just put in all these numbers and stuff. Sometimes it gets a little crazy. But a lot of these guys are smart. They have great research. They get into the field. They have 30, 40, 50 research analysts and interviewing people. And sometimes they come up with some really good research that I'll post. And I'll say, hey, guys, did you see this? This is pretty amazing. Anyway, I like to post when there's something to really post about. That's interesting. And the past couple of days, I haven't posted. If you're on Twitter, it's at Frank Curzio. Hopefully you guys will follow because it is edgy. Speak my mind, just like I do in this podcast. So it's pretty cool. But I have my team in town, which is awesome. That's 6, 7 people here. And we're going over lots of things, like just strategies, goals, marketing, editorial, getting everything fine-tuned now that we finished the token offering. So now it's, hey, how we're growing the company over the next 6 months, 18 months, 24 months. Let's set a calendar, goals, and everything and make sure, we're all in sync and we're on the right page. So, when I have my team in here, I don't really post too much. But I really like Twitter. I like it as a platform. I don't post on Facebook anymore. I like Twitter a lot better. And I do post on Facebook, but only sometimes. Just this podcast, that's really it. But mostly it's Twitter. I really like it because you could follow almost anyone, right? And you get to hear their thoughts on topics like the markets, politics, sports, whatever. Usually it's entertaining because I'd say 70% of posts on Twitter are people angry, pissed off about stuff, which is cool. But it makes it entertaining. But when it comes to finance, it's hilarious. For example, a hedge fund manager posted a chart of a model, and this model is from John Hussman, Hussman Funds. So it's another fund manager, and just said, hey, this is, he forwarded it. And the chart says a 12-year total returns, and this is the chart based on his model for a balanced portfolio. When he says a balanced portfolio is 60% of your assets, 6% of money, S&P 500, 30% in treasury bonds, 10% treasury bills. The return over the next 12-year period, total returns, and I believe this is annually, is 0.05%. That's what his model says, 0.05%. So for me, I didn't even look at the model because I know Hussman. Hussman has been predicting a crash since 2011. The market's going to get, you can go back and look on Google. I'm not picking on the guy or nothing. I'm just stating facts. But he's someone that continues to do that to 2018, he just made a call. I think 2019, he said we're going to lose trillions in market cap and all this stuff. So for me, that guy is pretty much useless, right? He's been wrong. He hasn't changed his mind. He hasn't come out and said, hey, this is how I messed up, but I'm going to get nothing, right? So it's okay being wrong, but it's just someone that I totally avoid. So I didn't even look at the chart. But I did comment on it because I said, I'm curious to see what his model was saying in 2010, 2011, 2012, and it's a 12-year chart. So he has a loyal following, and there's a lot of hedge fund managers on there as well, and they just start coming at me. Frank, look at the chart. And I didn't even look at the chart because I don't want to waste my time looking at the chart. My point of it to respond to that was, why even forwarding this guy's work to anybody? Why would you expose your list to someone who has been so wrong where people follow you, they trust you? And when you think about that for a minute, in finance, I'm talking about with finance and Twitter, that's a topic here. It blows my mind of just the behavior behind it, of how when I look at people and they follow these people that have been wrong for such a long time, it's like a cult, right? And no matter what happens, they're going to follow that person as long as they stay true to that message. So if you're like, buy gold stocks since 2012, you got annihilated. You're dead. But these people just follow them. And what makes it worse, and look, I could cite 50 names right now about this. Again, we all get it wrong from time to time. I'm not picking on people who have it wrong from time to time. What pisses me off is the people who had it wrong for the last 7, 8 years. Your wealth continues to go higher while everyone who's listening to you continues to go lower. And you know what? That's really fucked up. That's my problem. But you know what? It doesn't even pay for me to even worry about it or care about it because the people following him don't care. And that just blows my mind. It's a religious like culture where people don't care about returns at all. They don't care about losing money or getting horrible advice. The only thing they care about is, hey, is this person like entertaining me? They have the same message I have. And they get convinced, or basically brainwashed into believing that everything these people that they're following say is fact. I mean, somebody posted on Twitter saying, $20 trillion is our deficit, and the stats of how much it actually is, and how even we're not going to be able to pay it back. Each person would have to pay a certain amount by X amount, 5, 10 times to even pay off this debt, which would never happen. And I want to respond and say, you know what? If I had $1 for everyone who cited our national debt as a risk since 1970, I'd probably have enough money to pay off the national debt myself. People love to cite it. They don't cite the other side. They don't cite the other side of the balance sheet, the assets, the equity in homes. It's all about, hey, this is my message. No. We don't want to talk about consumer spending. We don't want to talk about interest rates are super low. So yes, debt is going higher, but we're paying it off perfectly fine. Credit ratings are very solid. U.S. is doing fine. Nobody wants to talk about that, right? So the debt problem has been talked about by these, I guess bears, because even if we had no debt, they find something else to hate, right? And that's what my message is today, is you have to be careful because when you're looking at the markets and you're following certain people, you have to be willing to adapt to the markets. Right? I had this conversation with Meb Faber. I had this conversation with Ken Fisher. High-profile people. You need to adapt with the markets. You can't just stick with the holy cow. And what makes it worse is I have 5% of my assets in gold, but listening to these gold bugs makes me sick. Not to mention how wrong negative real interest rates are going to drive gold. Well, it hasn't. It's a safe haven. It hasn't been a safe haven. No, treasuries are a safe haven. You got to buy gold to structure the dollar. Well, the dollar keeps going higher and higher. Yes, it's pulling back a little bit. That's why gold's probably going higher now. But it's the same message, the same thesis, no matter what changes. And it's funny because when I read some of these guys, just because I want to get entertained, and maybe that's the point, they want tons of followers. They want people to argue. If you look on Trump's, how many millions of followers he has on Twitter, you just read one of his posts. At least 80% are just people ripping him apart. He's not deleting them. These guys aren't deleting me when I call them out. They like it because it's going to build their following, and they love that attention and entertainment. That's it. It's kind of smart. I give them credit. I'm not criticizing them. But when I see guys screaming from the top of their lungs how gold is not in a bear market and you would have did better, and they pick a certain time period that you would have been better when the market's at an all-time high, you basically been shitting on the market for the last 9 years, even though you're citing the facts that make equities the most attractive thing to own ever at any other time in history. You're saying the Fed is destroying it. They're just printing more money. What does that mean? They are printing money. Am I pissed about it? Yes. Do I think a lot of banks should have went out of business? I would have loved to see that. But that's not the case, so move on. But they're like, oh, the Fed's going to continue to lower and Trump's controlling the Fed and this and that. Right. What does that mean? It means equities are probably going to go higher because they're going to keep interest rates low. They do everything they can. And let me tell you something. The people who are predicting a 20, 30% market crash out there, which they've been predicting for the last 7 years, and even if the market crashed 50% from here, they'd still be wrong from their original projections. Go back and just go back and see some of these guys do things. 11, 12, 13, 14, 15, write books, revise them. Market's going to end, scare the shit out of everybody. They're making money selling their books. You're listening to them, you're losing money. But when I look at these bears and just what they have been saying for such a long time and looking at, hey, this is what the Fed's going to do. And if they're going to lower rates, like even if you look at again, the credit crisis, they bailed out everyone. I mean, look at what happened the last time. We had an event, right? The credit crisis. I won't beat it to death. Everybody knows about it. End of the world, global credit crisis, how to bail you out. I mean, they took over Fannie, Freddie, invested in AIG, Bank of America, all the major banks, funded all the banks. Pretty crazy. But you know what's even crazier? The government made a shitload of money on everything they invested in. They don't even know what to do with Fannie and Freddie anymore. They have a conservatorship. They're like, they thought they would probably dissolve them or they just said, just backstop it. That's why we backstop the housing market. Just put all loans, Fannie, Freddie, put them all in there. And you put them all in there. All of a sudden, the housing market rebounded very quickly in 2008. 2010, prices started going up again. And these companies are making billions every quarter, billions in profits, not revenue, profits every quarter. So the government made a fortune, right? They took the taxpayer dollars, which is really messed up. I get it. It angers me as well. But let's put your feelings aside. Try not to make this a religion for you. Because that anger and that emotion, all that pissed off, you're going to be following people telling you the government's terrible, the United States sucks, don't invest. And you're getting crushed, wondering why with all these risks. But you're not paying attention to the bigger facts here, which is the government had this massive bailout and made money on everything that they did. So if the market crashes 30%, say it's a geopolitical event, say it's a terrorist attack, say it's a trade event with China, whatever, you name your risk that's on the table right now. Brexit not going through, whatever it is. If the market crashes 30%, what do you think our government is going to do? They're going to bail you out again. There was no risk for what they did. I mean, I can see if they bailed out companies and then lost a fortune, but they made a fortune. Now, as an investor, you have to put that scenario on the table. I hate it. I hate the fact that the market goes down 30%. The Fed's going to do some lower rates, and they say, well, they're almost out of ammo. Bullshit, out of ammo. They were giving checks. They were giving checks to people to buy cars and homes and incentives. They could print money forever. It's horrible. It's terrible. The shit's going to hit the fan one day. But right now, it's not. It's a very favorable environment, just like it was when they backstop all the bad debt and said, hey, we got to try to inflate this market. Let's print a ton of money, get these banks to lend it out, more people spend it, and look at almost every asset outside of commodities has surged since the credit crisis, and the government made a fortune. So if the market crashes now, what do you think the government's going to do? So for me, that removes the doomsday scenario off the table that all these guys talk about. Again, even though they predicted 30, 40% decline in the market since 2011, if we fell that much today or this year, they'd still be wrong from their original projections. They're going to tell everybody they're right. They're going to be everywhere and just saying, I told you so. And that's the thing that pisses me off, too. I was saying before, I sidetracked a little bit, where about 5 to 7% of my total assets are in gold, 10% when including like equities and everything together with gold coins. So I'm a fan of gold. I'm a fan of investing in this resource sectors at the right resource stocks at the right price. Because as you know, when the cycle turns, these things don't go up 1, 2, 3x. They go up 7, 10, 20x. And it's been one of the most horrible cycles in gold and silver and commodities. So I like investing. I like advising people in my newsletters to invest in a lot of the stuff. But when I see this, and these guys, these gold bugs are just out there saying Bitcoin's terrible, it sucks, and why it's going to go to zero, and why the market's going to go to zero. It almost makes you hate gold. I feel like I'm going at these people saying the market's pretty good, and it's almost to them I'm saying gold is shit, which is not. But to them, it's gold or nothing. For me, it's wherever the market's going to move, wherever you're going to make money, adapt. Okay, because you're in gold the last 7, 8 years. You just watched the biggest technology bull run since 1999 and one of the biggest bull markets in a generation since the credit crisis. You just watched it go by because some guy was telling you, gold, buy gold, buy gold. The Fed's going to continue to print. Yeah, they're going to continue to print. They're going to continue to have interest rates at super low levels, which is why companies like Apple with $200 billion on their balance sheet continues to take out debt. Same with Microsoft. Because it just makes sense. You can make a higher return than that low interest rate. But just be careful who you listen to. Because I kind of just poked a little bit in there, and all of a sudden with Twitter, I had a guy, his name's Mark Yusko, who I'm a fan of. I think he's pretty cool and, entertaining. But all of a sudden he came out with a bet. He's like, Frank, put your money where your mouth is. I'll take cash. You take the S&P 500. I'll bet you $100,000. Charity. And I said, Mark, because I like you and I find you mildly entertaining, I'm going to give you a chance to take that bet back. And he said, double down. He goes, nope, let's do it. I said, okay. I said, why don't you come on my podcast and I'll tell you exactly why you're going to be wrong. And I will. I'll tell him why he's going to be wrong. You can take almost any 10-year period, and the S&P 500 has outperformed cash. I mean, you look at dividends, you look at, I'll create the whole scenario and tell you why the probability is extremely, extremely in anyone's favor who's going to bet the S&P than just putting in cash. More important, I think he's a money manager, and if he really thinks that cash can outperform the markets, I think it's a long short fund. But still, if I was investing in someone and they said, well, we think that cash is going to outperform the markets, what does that mean? It means you're going to have to take on extra risk, right? Whether it's shorting or whatever to outperform, or you're going to put my money in fixed income treasuries and charge me a huge fee for that. So for me, like from a client perspective, I was just surprised to hear that he believes cash is going to outperform. But again, I like him. I said, let's come on the podcast. He hasn't come back to me. I accepted his bet because he came back and said, yep, let's bet. I said, okay, I'm not going to say no to free money twice. So right now, I haven't heard back from him, but hopefully he'll come on the podcast and have a healthy debate. It'll be pretty cool. And again, $100,000 would be charity. Again, Mark's a pretty smart guy. I like him. Hopefully he comes on, but he just, opened his mouth and said, hey, I'm going to $100,000, put your money where your mouth is all over Twitter. And I accepted. And it's funny how, hey, I haven't heard back from you. So let's debate this on the podcast. Let's get it. Let's do it. Again, healthy debate, nothing crazy, no screaming. Just, hey, I want to hear his position, you hear my position in 10 years, $100,000 up to whatever charity he wants if I lose and whatever charity I want if I win. But let's get that bet going. I mean, you're the one who brought up on Twitter. Let's do it. Podcast open invitation. If you think there's too much of a home field advantage, I'll go anywhere. I'll go in your basement to debate you, whatever you want. But I'll tell you why you're 100% wrong. The S&P 500 will outperform cash over the next 10 years. Anyway, didn't want that segment to go that long, but a little emotional, a little bit of a rant there. Just be careful who you listen to, guys. It's just, you get caught up in this religion and you just think a certain way, and you're missing so much that's out there.